Hey everybody, it's Scott with the Davis team, back with another Wild Wednesday, Words of Wisdom Wednesday. Today we're going to talk about the hot topics of interest rates. We all know they're on the increase, and we all know we still need to buy homes, sell homes, and move around. Industry buzz phrase at this moment is marry the house, date the rate. And what that means is exactly that. Let's find the perfect house for our clients and for you, and we're going to date our rate. We are heading into probably a recession. We're not sure exactly when, into this year, next year, something like that. So these rates that we see now, my muddy crystal ball is telling me that they are going to be temporary, that we are going to have a refinance opportunity 12 to 18 months, something like that. Housing has always led our economy out of a recession. So if we do go into recession, when that happens, housing is going to lead us out, and lower rates are a byproduct of that. So marry the home means find the perfect home for you and your family, so you stop renting, you stop paying someone else's mortgage and building their wealth, start building your own and paying your own mortgage, and you're marrying the home and you're dating that rate because it's going to be 6 months, 8 months, a year, year and a half of payments, and then you're going to refinance in that lower rate. Rates are in the 5s and 6s depending on many different factors. Combined loan to value, down payment, all that kind of stuff, credit score, product type. So we're anywhere between in the mid 5s to the mid 6s, again, depending on those different factors. That's not the end of the world, no matter what the media tells us. It does make it a little more painful, so that's why we're looking at buy downs, we're looking at ARMs, we're looking at things to make it a little more affordable and making that monthly payment a little more palatable, even though the housing prices aren't going down. And no, there's no crash either. We might see a recession. We're going to see some stabilization, and maybe a pullback a little bit of the home prices, moving back towards more of a buyer's market than the hot and heavy seller's market we've had for so long. But definitely no crash. Again, that's what my muddy crystal ball is telling me. If you do have a mortgage now, refinances have gone the way of the dodo, obviously. But let's take the emotion out of that whole process, and the emotion is obviously that number. 2 or a 3, where it's a sexy number. That's what we want. 5s and 6s, not so sexy given the past couple years. But if I can take you from a 2 or a 3 and move you into a 5 or 6 and do a debt consolidation, get rid of mortgage insurance, get rid of those 23% interest rate credit cards, and take your cash flow monthly. So yeah, your payment does go up, your mortgage payment goes up, but your overall cash flow increases by a couple $100 a month. That's a little more sexy than having that 2% rate, but you're paying an extra $1,000 a month. I'll put this in the body of the email, so there's a little example of what I'm talking about. But if you guys have any questions, please don't hesitate to give me a call, 703-209-3138, or scott@thedavistteam.com. All right, guys, have a great week. Like and subscribe. I will figure out where that button is, but please hit it, smash it, so you don't miss this awesome content. And let me know what you need. Otherwise, I'll see you next week. Bye, guys.